All right, welcome everyone. Give a few minutes here to get connected. And today we'll be discussing some specialty programs for HomeReady and HomePossible. So thank you for being early. If you have any questions or comments, please drop them in the chat there. We'll get started here in just a second. All right, good morning everybody. Looks like we're about ready here. Let's go ahead and get started. All right, welcome everyone. My name is Nick Hershey. I am the president of the Mortgage Calculator. We are a non-QM lender that specializes in over 5,000 unique loan products, but we also have the standard conventional FHA, VA, USDA, and our topic for today will be our conventional programs that are special that Jose will talk about here in a minute for HomeReady and HomePossible, which are typically for our first-time home buyers, but not necessarily always. So Jose will go over those different special programs with his 28 years of experience and how we can use those to effectively position our borrowers. First, as we do every morning, I will go ahead and pull up the live rate tool and we can check out the live rates for today. So let me switch the screen here. And pull up our pricing tool. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It's February 22nd, just after 11 a.m. Eastern. And we're going to check out the live market rates for today by comparing across the programs the same scenario. If you'd like a full breakdown of all of the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers that can send that info for you. So to compare across the programs, we'll set up a basic scenario, and that way we can compare apples to apples here. We'll set up 400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. And then we'll compare that with FHA, which is usually the next best option for most borrowers. And then we'll check out our expanded guidelines where we have over 5,000 additional options beyond the standard using alternative income. We also have VA and USDA. VA, we did earlier this week, some examples. That's only for our eligible active service members and vets. If you are, just let us know and check out those episodes. And USDA is only for eligible properties. We did that yesterday. So if you are looking in those areas, just let us know and check out the episode from yesterday. So we'll start today with conforming conventional. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40% here. So with these basic settings, let's check out the market today. And it ticked back up just a touch. So yesterday we were just a touch under 6.9. Today we're just a touch over. So 6.624 rate for 2.375 discount points and cost. Puts the final APR at 6.915. So still good options here. We're still not quite above the national average of 7% here at the Mortgage Calculator. So that's good. We're lower than average. But these rates did tick up a touch here with the recent news. Now, let's compare this to FHA, which is usually the next option if our customer doesn't qualify for conventional for any reason. So we'll set up the same exact scenario so we can compare across the programs. The only thing we'll change here is the loan type to FHA, which does allow a little more leniency on credit issues, as well as a much higher debt to income ratio, but we're going to keep everything the same to compare here. So let's check the FHA options, and just a touch lower here, 5.875 rate, 2.25 discount points at cost, final APR at 6.804, so just a touch lower than conventional. So our customers that qualify for both, today's one of those days where FHA is a touch lower, so definitely check those out if you qualify both. But if you need to use FHA, this APR does include the upfront and yearly mortgage insurance that is required. So definitely a cool option, as it is almost identical to conventional pricing for our borrowers that need to use these programs. So great options for our borrowers there. Now, where we love to specialize is if for any reason our customer doesn't qualify, unfortunately, for either program. Many other banks or lenders have to deny that customer, but that's where we love to present our 5,000 additional options here under expanded guidelines, also known as non-QM. So everything will stay the same. However, we get a new option here for income. So full doc is what we use for conventional and FHA. Sorry, that's 2 years of tax return. So if our customer doesn't qualify with that documentation, we'll need to use an alternative. So we have asset-related programs, business bank statement programs, the investor programs are just for investments. We'll pull that up here in a second. Personal bank statement 12-month is the most popular. That's what we use for the demo. We also have RSU, stated income, VOE, 1099, P&L, no income CDFI, and we do episodes on all these different types. So check those out. But for the demo, we always use the 12-month personal bank statement, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and may not qualify at all, or just may need a little more income. Either way, we can solve the problem. No tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in this example, using just their cash in the bank, no tax returns at all. So many times our self-employed borrowers qualify for much more income this way. So let's check out the bank statement options. So almost the same as yesterday here, 7% rate, 2.225 discount points and cost. It's a final APR at 7.39. So good option here for our customers that need to use alternative income. We're within half a point of conventional, so that's pretty amazing here. When our non-QM options are within a half a point of conventional, almost identical. Definitely good options for our borrowers that need that little bit of extra help. And if we scroll down, there's hundreds of different variations here of bank statement options, some at a little bit higher rates and costs, may allow credit issues and events such as foreclosures, bankruptcies, etc. And some may allow different ways to calculate the income. So hundreds of options. Please get with our team to find the best ones. And now before we go into Jose's example, we always do live pricing for investment properties. So our final two examples here, we'll do investment properties. And we'll set the LTV to 80% loan, 20% down payment as usual. And we'll ask the computer to find the lowest rates we can offer for conforming conventional, and then we'll compare that with our non-QM expanded guideline options for investments. Remember, government programs, FHA, VA, USDA do not work for investment properties. So we'll start with conforming conventional. Everything will stay the same as all our other demos. The only thing we've changed here is the occupancy. So let's check out the conventional investment options. So as I end up saying every day for the last little while, when rates go up a little bit, we have some unique options. We have our portfolio option pop up, a little more viable in some cases. And today is one of those days. 6.875 rate, 3.25 discount points of cost, puts the final APR at 7.264. For this option that follows the same guidelines as Fannie and Freddie, all of the conventional programs, but doesn't actually go to them. So this loan doesn't require the same loan level price adjustments because it's a portfolio loan. The first true conventional option that does have all of the loan level price adjustments that Fannie and Freddie require for investments is here. 7.125 rate, 3.5 discount points and cost, final APR of 7.549. So good options for our customers that you need to use conventional. I definitely recommend to check out this portfolio option if your customer is looking, and definitely recommend all our investors check out a non-QM option. So for our final demo, we'll put it back to investment again, 80% loan to value. And this time we'll check out investment property options for our non-QM here. So the first thing we need to select here under non-QM is our income type. The most popular income type and most popular loan we do here is our DSCR loan. That's because it doesn't require any income or employment info from our borrower. We simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. The estimated rents can cover the expenses, aka the property cash flows. That's a ratio of 1 or higher. We even have options for ratios under 1, but for the demo we use 1.5 so that we can see all the best programs pop up. And finally, a prepayment penalty must be selected. 3 years is standard on these programs, so that's what we use for the demo. We can select no prepay. That does limit the programs that show up and cost more. You can also select 5 years, which limits the programs, but does save our customers some money if they hold the properties long term. 3 years is the most common, so that's what we use for our demo to see the most common options here. All right. So still amazing. Smoking DSCR rates, better than conventional. Absolutely amazing. So this option here at the top, 6.75 rate, 3.15 discount points in cost, puts the final APR at 7.229, even beating conventional. So I'd say 100% of investors that look at this option will take this. So definitely recommend all the investors out there check it out, and all the MLOs out there watching, be sure to quote these DSCR options. Now there's tons of flexibility once we get into DSCR. You can do 1, 2, 5, 10 loans at a time. And as we scroll down this list, some of these programs may allow bankruptcies, foreclosures, other credit issues. Some may allow different ways to calculate income. Some of these ones at higher rates and costs may allow different property types as well. So tons of flexibility. Please get with our team to find the variation that works best for you. Now let me switch my screen again, and we'll get into Jose's topic for today, which is HomeReady and HomePossible. So these are some specialty loan types. We don't get to quote live on the pricer because these are a little bit more specific scenarios, just as Jose does every time. We'll use his 28 years of experience to break down what these programs are, why we use them, and of course go through some live rates as usual. So Jose, first, let's talk about what these are for and not for real quick. They are specialty programs, and then let's check out the live examples.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Freddie Mac's HomePossible and Fannie Mae's HomeReady program are two affordable housing programs. Now, they are commonly, mistaken as first-time home buyer programs because they do go for a one-unit property to a maximum 97% LTV, just like Fannie and Freddie's first-time homebuyer programs that go up to a maximum 97% LTV for a one-unit property. However, there's a big difference in that, again, you do not have to be a first-time home buyer to qualify under Freddie Mac's HomePossible or Fannie Mae's HomeReady program. What you do have to do is you have to meet the area median income requirements for that census tract, right? So to do that, you would go to the geocoder either for HomePossible or the geocoder for HomeReady, plug in the property's address, and see where it fits into the mix, right? Once you put the address into the geocoder, it's going to show you the census tract that the property lies, and it will tell you the HUD area median income for that census tract. And for this program, you do have to be at 80% or under the area median income. Now there is possibility to exceed that, to have no income restrictions for this program if the property lies in a minority census tract or a low to moderate income census tract. If those two scenarios are relevant to the deal, then no income restrictions for HomePossible and HomeReady. So again, I just want to restate, this is not a program for first-time home buyers. We just closed one the other day. They were buying another home. They were not a first-time home buyer, and they were able to buy with the low down payment and also the reduced interest rates and the reduced mortgage insurance for these programs. The mortgage insurance factor is 0.25 for this 97% LTV versus 0.35 for the regular 97% LTV first-time home buyer option. So that's quite a difference in the cost of the mortgage insurance. And as you will see when you compare these rates to the ones that Nick was just showing you, for the conventional loans, the rates are definitely lower. So let me share my options with you today. Right, let me make this just a little bigger for you all. Okay, actually, I'm at the max right there. So this first option I'm sharing for you is a home possible purchase of a 1 unit property, 97% LTV. So you will note that the lowest cost option actually has a lender credit, 7.125 with a lender credit of zero point 0.2 points. And you can buy that down all the way to 6.5%. Now, I always like to state when I'm stating how low you can buy down the rate, this is usually uh, without running any compliance tests at all, without getting any bona fide discount points, which we may be able to get depending on the credit score of the borrower and the deal. And also, this does not take into consideration if there is any seller contribution where the seller would be paying the points, right? Because if the seller is paying points of the buyers, then those points wouldn't be counted towards a compliance test because you would code your itemization, your fee itemization as a seller paid fee instead of a borrower paid fee. And then that loan discount fee or that portion of the loan discount fee that the seller is paying will not be counted towards your compliance test. But in these examples right here, we're just assuming, worst case scenario, no bona fide discount points, no seller pay contribution or anything like that. So this one is Home Possible, 1 unit, 97%. And then just to show you differences here, this is HomeReady, which is Fannie Mae's option, 97%. And pretty much almost exactly the same. This one was a lender credit of 0.2. This one is lender credit of 0.1. And you can buy it again down to 6.375 at a cost of 2.25. And this one is 6.5 at a cost of 2.25. So the other one is better at the bottom end. This one's better at the top end. So now 2 to 4 units. This is another pleasant surprise for this program. Now we all know that Fannie and Freddie recently, for primary residences, increased the LTV for 2 to 4 unit purchases up to 95%. So that's great. However, it's not going to be at the interest rates that HomeReady and HomePossible can do. So HomeReady and HomePossible do allow up to 95% LTV for a 2 to 4 unit purchase, which is amazing. So we're looking at 7.125 with a little bit of a lender credit and 6.3. So it's a little bit weird here. Had a little, I don't know what happened. 6.375 lowest cost option. Now Home Possible 1 unit rate and term refi, right? 97% LTV is the maximum LTV for a rate and term refi for a 1 unit. Cash out refis are not applicable for this program because since this is an affordable housing program, the purpose of this program is to either help borrowers purchase the home or help borrowers stay in the home through a rate and term refi to lower the interest rate and lower the payment. But it is not meant for any cash out refis. So 7.125 again being our lowest cost option and 6.5% being our lowest rate option. And now we have our Fannie Mae HomeReady 2 to 4 unit rate and term refi. And again, as is the same for the purchase route, the rate and term refinance route for this option also has 95% max loan to value. 7.125 is the lowest cost option. 6.375 is the lowest rate option. And our last example here is manufactured home purchase, right? You can do rate and term refi in the manufactured home as well. As we all know, manufactured homes are a hot segment of the real estate market due to the issues with affordability, housing affordability throughout the country. Right? Manufactured homes tend to be less expensive than site-built homes. 97% max LTV as well. And Great rates for this program for a manufactured home. 7.25 is our lowest cost option, and 6.5% lowest rate option for this amazing manufactured home purchase option at a 97% LTV.
All right. Let's see if we got any questions. All right. First customer here. Daisy asking if a borrower qualifies for the HomeReady program and are a first-time home buyer. Would it make more sense to get into that program versus first-time home buyers? Good question.
The HomeReady and HomePossible programs are going to have lower interest rates and lower mortgage insurance than the first time home buyer program because it is an affordable housing program. As I was mentioned earlier, there are area median income restrictions, right? So they don't really want you to make more than 80% of the area median income for that census tract. Hence, they offer lower rates and lower mortgage insurance to increase the affordability.
So the answer is yes. You
yes,
want the special programs. Yes.
correct. And may I also state that there are also additional considerations for this program regarding seller credits.
As in higher
Higher,
amounts that we
yes,
can go
higher,
to.
yes.
And
That's
not just
another,
seller credits, that would be interested party contributions,
correct.
which would be any combination of outside party contributions, real estate agents. Jose uses that to his advantage sometimes as well. All right, good questions. Don't see anything else. If you got any questions, throw them in the chat. But we'll go ahead and wrap up. These are great programs, not only for our first time buyers, as Jose mentioned, but anybody that qualifies for the programs based on the area median income, or even in census tracts, you can get away without even using the area median income. So definitely great strategies. Definitely check these out for your borrowers that may qualify. Don't overlook these opportunities to save your borrowers some money. And we'll be back tomorrow again at 11 a.m. for another episode of Daily Rates Live with the Mortgage Calculator. Thanks everybody for tuning in, and thank you, Jose, for the great examples.
Have a great day, everyone. Thank you.